Special Reports is a daily show that will cover issues surrounding the economic collapse. All our reports and daily alert news are backed up by source links. We work very hard to bring you the facts, and we research everything before presenting the report. Subscribe for latest on financial crisis, oil price, global economic collapse, dollar collapse, gold, silver, Bitcoin, global reset, new world order, economic collapse, economic news, political, geopolitical news. Today, we talk about futures flat as dollar surge continues. Chinese yuan tumbles. Global stock markets were firmer on Wednesday, supported by Tuesday's euphoric tone when not even the Netflix debacle could hold back the Nasdaq from hitting a new all-time high, as a positive assessment of the U.S. economy from Fed Chair Powell boosted the dollar, lifted bond yields and hit raw materials and emerging market currencies, while pummeling gold to a one-year trough. On Tuesday, Powell had a little something for everyone, cementing the rate hike path while preserving his options by saying gradual tightening would continue for now. The Fed chairman offered few surprises, which allowed markets to focus on earnings. Day 2 of Powell's testimony is later today, this time in the House. Powell's testimony to the U.S. Senate yesterday gave currency markets a much-needed reality check, DBS Group strategists Philip Wei and Eugene Lau write in note. Looking past the trade war worries meant a stronger U.S. dollar, not vice versa. It basically means another rate hike in September and most likely another one after that in December, said Rabobank market economist Stefan Koopman. He couldn't stay away obviously from the potential threats of protectionism, but he is still waiting to see how everything pans out, so he wasn't really concerned about it, and that is giving the market another boost. Stocks in Europe climbed, Asian stocks were mixed, while S&P 500 futures initially edged higher only to hug the unchanged line later in the day, although if yesterday's action is any indication, expect another burst higher out of the gate, now that 2,800 in the S&P is in the rearview mirror and the next resistance level for the S&P is the January 26th all-time high of 2,873. In overnight trading, Google parent Alphabet fell into pre-market trading as it was said to be facing an imminent $5 billion fine, curbing Nasdaq futures. The S&P has finally broken to the upside through 2,800 out of the range that has confined it for most of this year, and this could now be the start of a grind higher in global equities over the next few weeks, wrote analysts at JP Morgan in a note. Shares in Europe advanced after a mixed session in Asia, as car makers were boosted by the prospect of negotiations to reduce tariffs, while technology shares were spurred by an apparent turnaround at Ericsson and forecast of greater profitability at chipmaker ASML Holding Nevada, as well as yesterday's Nasdaq gains. European auto names are supported by reports Europe is exploring dialogue with U.S. President Trump regarding a reduction in U.S. auto tariffs. Earnings have been dominating the morning with the likes of Novartis, plus 2.2%, AkzoNobel, plus 0.9%, Ubisoft, plus 6.3%, reporting. BHP, plus 3.0%, currently stands at the top of the FTSE 100 after reporting positive Q2 production. Elsewhere, Italian banks fell to the foot of the Italian benchmark after UK clearinghouse LCH raised the margin call on BTPS. Earlier, Asian stocks started off on the front foot, with the MSCI Asia Pacific Index advancing after Nikkei gained as much as 0.7% and Chinese stocks rise for first time in 4 days. However, the relentless rise in the dollar spooked the yuan and the Chinese currency tumbled, with the yuan rising above 6.75, the highest level since last July, and prompting fresh questions if the BOC red line, which was drawn earlier this month when the currency slid below 6.70, has been long forgotten and whether Beijing will allow the yuan to depreciate much further. The continued weakness in the yuan prevented Chinese stocks from rebounding, and the Shanghai Composite slumped again, closing near session lows. In FX, the dollar rose for the second day against all of its G10 peers after Powell's upbeat economic assessment on the U.S. economy and that the Fed will continue to gradually raise interest rates for now. The Bloomberg Dollar Spot Index rose 0.4%. Climbing to a 2-week high ahead of day 2 of Powell's testimony, this time before the House. Meanwhile, the pound tumbled to a 10-month low against the dollar and gilt futures rallied after UK CPI data fell short of consensus, with both rate hike odds sliding to 74% for Aug. Meeting, from tilde 83% ahead of the print. Meanwhile, the yen briefly weakened 113 against the dollar for first time since January as Bloomberg Dollar Index remains bid following Powell testimony. Treasuries held steady. Core euro area bonds edged higher, while peripheral bonds slipped even as Germany sold 30-year bonds. In other overnight news, Fed's George, non-voter, Hawk, stated the U.S. economy is in excellent condition and that monetary policy remains accommodative. Fed's George also stated that gradual rate hikes are required and uncertainty remains regarding speed and distance of Fed rate hikes. Elsewhere, Alphabet's Google are to be fined €4.30 BLN by the EU regarding Android, according to reports, pressuring the Nasdaq. Oil declined after API reported a surprise increase in U.S. crude inventories. Commodities have been subdued, in tandem with overnight price action. T flirts around $67.50/barrels, while Brent is below $71.50/barrels, weighed on by last night's API's printed a surprise build in crude inventories. Metals are lower today, gold minus 0.4%, pressured by the firmer use. Elsewhere, while copper's attempts to nurse losses were somewhat futile alongside brought subdued tone across the complex. U.S. API weekly crude stocks, the 9th of July, plus 0.629 m versus exp. Minus 3.600 m, Prev. Minus 6.795 m. Looking ahead, highlights include U.S. building permits, housing starts, TAs and Fed's Powell. Scheduled earnings include IBM, Morgan Stanley, Abbott and American Express. Market snapshot. S&P 500 futures up 0.1% to 2,813.50. Stocks Europe 600 up 0.5% to 386.74. MXAP down 0.02% to 164.98. MXAP down 0.1% to 535.21. Nikkei up 0.4% to 22,794.19. Topix up 0.4% to 1,751.21. Hang Seng Index down 0.2% to 28,117.42. Shanghai Composite down 0.4% to 2,787.26. Sensex down 0.5% to 36,351.67. Australia S&P/ASX 200 up 0.7% to 6,245.11. Kospi down 0.3% to 2,290.11. German 10-year yield fell 0.7 bps to 0.339%. Euro down 0.4% to $1.1610. Brent futures down 1% to $71.41/barrels. Italian 10-year yield fell 10.8 bps to 2.204%. Spanish 10-year yield rose 0.4 bps to 1.254%. Gold spot down 0.4% to $1,223.21. US dollar index up 0.3% to 95.25. Top overnight news from Bloomberg. Google will be fined around €4.3 billion, $5 billion, by the European Union over Android apps on Wednesday, setting a new record for antitrust penalties, according to a person familiar with the EU decision. Jerome Powell said in his semi-annual testimony Tuesday the central bank's plan to keep gradually raising the federal funds rate, with the caveat, for now. He added protectionism can hurt economic growth and potentially undermine wages. UK government whip's tactics are under attack after PM8 wins knife edge vote, saving her from what would have been a catastrophic Brexit defeat. EU govts will probably resist further inflaming the UK's Brexit turmoil when they meet on Friday. The Trump administration plans to open an investigation into whether uranium imports are harming national security, a move that could lead to tariffs on foreign shipments of the metal, said three people familiar with the matter. European Commission President Jean-Claude Juncker will meet President Donald Trump in Washington next week to explore the possibility of starting negotiations on reducing car tariffs for several key trade partners, according to two people with knowledge of the plans. President Donald Trump said Tuesday he accepts the conclusion by U.S. intelligence agencies that Russia interfered in the U.S. presidential election, marking a retreat from comments just a day earlier amid a backlash from Republicans. European Commission President Jean-Claude Juncker will meet President Donald Trump in Washington next week to explore the possibility of starting negotiations on reducing car tariffs for several key trade partners, according to two people with knowledge of the plans. UK inflation unexpectedly held at 2.4% last month as cheaper clothing and computer games offset the rising cost of filling up a vehicle. Asian equity markets traded with a positive tone as momentum rolled over from US where all majors gained and the Nasdaq posted fresh record highs on tech outperformance, with sentiment also underpinned after upbeat comments from Fed Chair Powell. ASX 200, plus 0.7%, and Nikkei 225, plus 0.4%, were higher with Australia led by miners including BHP after the industry giant posted strong Q4 iron ore production numbers, while Japanese exporters were lifted by favorable currency moves in which USD/P briefly rose above 113.00 for the first time since January. Hang Seng, 0.2%, and Shanghai Comp, 0.4%, bucked the trend despite the BOC conducting a third consecutive daily net injection via reverse repos with losses spurred by continued weakness in blue-chip energy names, while Xiaomi shares surged amid reports. CEX agreed with mainland exchanges on changes to Stock Connect inclusions which will ultimately allow shares with weighted voting rights to be included for southbound trade. Finally, 10-year JGBs were uneventful as focus was centered on riskier assets, and after an enhanced liquidity auction for longer bonds also failed to spur price action despite a higher B/C than previous. Top Asian news. India stocks erase gains as government gets no confidence motion. Japan's summer power prices surged to 4-year high amid heat. Taiwan stocks resilient to trade concern as locals step up. Topix posts best 4-day advance since February as yen dips. European equities kicked off the session on an optimistic note. Euro Stoxx 50 plus 0.5% as the tech sector is boosted by Nasdaq's record close and earnings from Asml plus 6.4%, dragging counterparts higher in sympathy. European auto names are supported by reports Europe is exploring dialogue with U.S. President Trump regarding a reduction in U.S. auto tariffs. Earnings have been dominating the morning with the likes of Novartis plus 2.2%. AkzoNobel, plus 0.9%, Ubisoft, plus 6.3%, reporting. BHP, plus 3.0%, currently stands at the top of the FTSE 100 after reporting positive Q2 production. Elsewhere, Italian banks fell to the foot of the Italian benchmark after UK clearinghouse LCH raised the margin call on BTPS. Top European news. UK's May pays price of trust to survive in Tory Brexit war. Dansk's laundering headache and weak profit spark sell-off. Deutsche Bank raises European miners to overweight on China bet. Stanchart private equity to buy stake in Bow Group from Naspers. In FX, the DXY was back above 95.000 in wake of supportive vibes from Fed Chair Powell on Tuesday, but the broad USD also benefiting from the demise of rival currencies amidst further posturing and positioning in global trade wars. Note, the CNY and CNH have both fallen further below levels that previously sparked official intervention, partly by design via BOC fixing. GBP, no let up in the negatives for the pound as broadly softer than forecast headline and pipeline UK inflation prints compound losses made on the back of ongoing political instability and Brexit divisions within Whitehall. Cable has now lost hold of another big figure, 1.3100, and tested bids just ahead of 1.3000 before some consolidation/short covering, with perhaps circa 2 BN option expiries at the strike for tomorrow also being defended, while EUR/GBP has breached psychological resistance at 0.8900. Also a victim of the buoyant greenback and divergent yield/CB trends, with a single currency seriously testing 1.1600 bids after dipping through near-term technical support around 1.1613. Commodities are mostly subdued, in tandem with overnight price action. T flirts around $67.50/barrels, while Brent is below $71.50/barrels, weighed on by last night's APIs printed a surprise build in crude inventories. Metals are lower today. Gold minus 0.4%, pressured by the firmer use. Elsewhere, while copper's attempts to nurse losses were somewhat futile alongside brought subdued tone across the complex. US API weekly crude stocks, the 9th of July, plus 0.629 m versus exp. Minus 3.600 m, Prev. Minus 6.795 m. Citi raised long-term copper price forecast to $7,500 /ton from $7,000 /ton, while it stated that trade war is a long-term buying opportunity for copper and said to prepare for a decade of copper on steroids. Looking at the day ahead, in the U.S., June housing starts and building permits data is due before the Fed's beige book in the evening. Morgan Stanley, IBM and eBay will also be reporting their Q2 earnings. Fed Chair Powell will also appear before the House Financial Services Committee, although that should largely be a copy and paste of yesterday. U.S. event calendar 7 a.m., MBA mortgage applications, prior 2.5% date, 30 m. Housing starts, state. 1.32 meters, prior 1.35 meters. Building permits, state. 1.33 meters, prior 1.3 meters. 10 a.m., Fed Chairman Powell appears before House panel. 2 p.m., U.S. Federal Reserve releases beige book. DB's Craig Nicole concludes the overnight wrap. Yesterday in Washington, Jerome Powell was busy flying the flag for the Fed with his semi-annual testimony in front of the Senate, but it certainly lacked the drama of a mountaintop finish. The prepared text was pretty much in line with expectations, with one exception being the inclusion of "for now" in the sentence. The font believes that, for now, the best way forward is to keep gradually raising the federal funds rate. That was a new shift in tone, and whilst the initial read-through was that it might be dovish, you could probably also make an argument both ways, in that it could also mean accelerating tightening should there be obvious signs of overheating. So perhaps just an optionality play. In terms of the Q, and much of the focus was on what the Fed chair may or may not say about trade tensions and the flattening yield curve. On the former, Powell said that there was no evidence of trade tensions coming through the data, but that the Fed is hearing a rising chorus of concerns. That wasn't particularly new information compared to what we've heard in the past from Powell. On the yield curve, Powell highlighted that what really matters is where the neutral rate sits. DB's Matthew Luzetti believes that while he didn't say so explicitly, this would seem to argue for focusing on yield curve measures that may reflect expectations for neutral more accurately and are less distorted by other factors. Powell also mentioned that there are many differing views within the committee on how concerned to be about the flattening curve, so it's certainly a topic of debate internally. Speaking at a separate event, the Fed's Esther George sees the U.S. economy in excellent shape but refrained from specific rates guidance, as she noted, gradual further increases in our rates will be necessary to return policy to a neutral stance, although there is considerable uncertainty about exactly how far or fast we need to go. If the market was hoping for a bit of volatility in rates while Powell was speaking, well, it will be fairly disappointed with the high-to-low range of paltry 2.1 bps for the 10-year Treasury. They eventually finished plus 0.2 bps higher at 2.861%, while 2-year yields finished plus 1.9 bps higher, meaning the curve flattened to a new low of 24 bps. The US dollar index rallied pretty much from mid-morning, however, closing plus 0.50%, while in Europe bond markets were for the most part a bit stronger, 10-year bonds minus 1.8 bps to 0.343%, with BTPS standing out after 10-year yields fell minus 10.9 bp and below 2.500% for the first time since the end of May. At the other end of the risk spectrum, it looked like equity markets might be in for a rough day after that disappointing Netflix earnings report and Goldman Sachs numbers, which were also taken fairly negatively by the market. However, the damage for the Nasdaq lasted only a matter of minutes after the index wiped out an initial minus 0.72% fall at the open to hit and changed just over an hour in, before closing plus 0.63% last night and at a new record high. Despite Netflix closing down minus 5.24%, albeit pairing a fall of as much as minus 14.1%, the remainder of the heavyweight tech names merely shrugged their shoulders, with the NYSE FANG index plus 0.79%, wiping out an initial loss of minus 2.36% as the likes of Facebook, Amazon and Alphabet all hit new record highs. Meanwhile, the S&P 500, plus 0.40%, followed a similar pattern and edged back over the 2,800 mark to hit the highest closing level since February 1st, despite the energy sector doing its best to hold the index back after oil fell minus 1.52% at the intraday lows, before recovering into the close. Here in Europe, the Stoxx 600 nudged up to a plus 0.24% gain, while the DAX finished plus 0.80% despite having been flat just over an hour out from the close. That positive momentum has continued into Asia this morning, with the Nikkei plus 0.78%, Kospi plus 0.17%, Hang Seng plus 0.31%, and Shanghai Comp plus 0.51%, all up, while futures on the S&P 500 are also pointing towards a positive start. It's been fairly quiet for news flow overnight. However, Bloomberg has cited unnamed sources that noted the U.S. administration may open an investigation on whether uranium imports are a threat to national security, which could lead to higher tariffs. The U.S. Commerce Department has declined to comment, while the Commerce Secretary Ross said last month that he would make a decision on the probe very shortly. Back to yesterday, where there was no getting away from Brexit headlines again. In the end, PM Theresa May managed to fend off the pro-European Conservative rebels, albeit by the slimmest of margins following more amendments voting last night. Crucially, the government want to keep open the option of Britain entering into a customs union post by 307 to 301 votes. So currently the muddle-through continues for PM May. Meanwhile, the Beau Governor Mark Carney also added to the debate, as he noted that not having a Brexit deal with the EU could present a financial stability event, and that Britons could be worse off as the country is moving from an integrated market to a much less integrated system, which would be a hit to the economic performance. Further, he added that the Beau will have to provide their views to any Brexit deal reached between the UK and the EU. Elsewhere, Rolls-Royce CEO Warren East also cautioned that if there is no clarity on Brexit trading arrangements, the company may have to stockpile a buffer of parts to maintain production in the fourth quarter. As for the economic data yesterday, net the latest industrial production data in the U.S. was a touch on the softer side. While the June print came in slightly ahead of consensus, plus 0.6% MOM versus plus 0.5% expected, the May reading was revised down fairly materially to minus 0.5% MOM from minus 0.1%. That said, production is still up a solid plus 3.8% YoY, which is the second highest reading since 2014. Manufacturing production, plus 0.8% MOM versus plus 0.7% expected, was also hit by downward revisions to prior months, while in the housing sector the July NAB Housing Market Index printed unchanged at 68, as expected. In Europe, the main data focus was the UK's May and June employment data. There were no real surprises from the release, however, with the unemployment rate confirmed as holding steady at 4.2% as expected and weekly earnings ex-bonus confirmed as growing at plus 2.7% 3 meters/YoY, also in line with expectations. The August Beau hike odds are now up to 82%, having dipped below 50% just last month. Before we wrap up, a quick mention that yesterday we got confirmation that European Commission President Jean-Claude Juncker is to meet President Trump next Wednesday, the 27th of July, with the pair expected to discuss trade amongst other subjects. Politico ran a story yesterday quoting two Berlin officials as saying that they would like Juncker to provide Trump with 3 different trade deals, including a bilateral EU-US agreement to lower tariffs on certain goods, a plurilateral agreement to cut tariffs on autos, or a watered-down version of TIP. So one to watch. Looking at the day ahead, we will get the June CPI, PNRP data in the UK this morning along with the May House Price Index print. This is followed by the release of the final June CPI reports for the Euro area, along with May construction output data. In the US, June housing starts and building permits data is due before the Fed's beige book in the evening. Morgan Stanley, IBM and eBay will also be reporting their Q2 earnings. Fed Chair Powell will also appear before the House Financial Services Committee, although that should largely be a copy and paste of yesterday. Thanks for watching. Tell us what you think in the comments section below.